Mortgage demand now half of what it was a year ago. But I say blue skies ahead. Coming up here in the jar. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 9:10 here in the middle part of the country on Wednesday. It is October 26, 2022. Here's your morning jog around the economic headlines of the world. I want to start off with some macro before I get to some earnings, and they were not good earnings, folks. Macro, housing. Let's talk about interest rates. Let's talk about mortgage applications. Now down about 50% from last year. Now remember, last year still had really low interest rates, something like 3%, had lots of refinancing. We were still getting mortgages off the collective books of American households that were at 4.5%, 5%. How do I know? Because I help refinance many of them. So now that that debt is lower and rates have increased considerably, right? Mortgage rates are now 7%. Folks are obviously getting sticker shock at what is going on with home purchases. Does this mean home prices need to contract a little bit? Maybe, but keep in mind, you're going to have family formation that continues over the next couple of years. That demand may be getting pushed off, but eventually those houses need to be bought. We still have net population growth in the US. There's still a big demand for housing long term. Now, a lot of that's going multifamily right now. Eventually, you'll see the space folks want when they have families. It's going to be coming back into style. So while you see a lot of negative headlines about home builders, about mortgage demand, etc., long term, still kind of like single family housing. It's the bedrock of many Americans' wealth as they grow. And folks were taking 7% mortgages not too long ago in an investing time point. It's one of these things where we think, oh gosh, 7%, and it's never coming back. No, if we have another rate cycle, Fed moves it up to 5.5, then we have a little bit of a bad economy, it goes down to 3, and suddenly you have mortgages at 5%, which look a lot more attractive than 7%. And guess what? Folks remember 7% and want to go out and buy homes at 5%. That's how things work. It's not just the absolute level of rates that matters, it's the relative to recent memory. That's what home buyers think. That's what matters, not necessarily just cap rates, because home buyers don't think about things like investors do. They think, hey, I need a place to put my family. Boeing, not a great quarter. Air Force One had some issues with their tanker program as well, but did give some sort of upbeat estimates here. You know, look, on a go-forward basis, if you have a write-down right before sort of a recession or earnings contraction, sort of get it out of the way. Gosh, it's actually kind of a good move for your stock price because you're sort of pushing all of these losses forward, and that way when everybody else is sort of losing money and sort of losing estimates, just not doing real well because maybe the economy's in a little bit of a recession, hey, Boeing's doing okay, we have stable orders, we have additional aircraft getting out to our customers. Boeing continues to have top tier management, guys. They just really know how the game's played. Speaking of top tier management, Microsoft does as well. Not great news. Say, hey, our revenues are sort of moderating here as tech is leading the way in terms of industry restraint on spending. Google, I think they said earlier this week they were going to slash their workforce growth rate, not their workforce, but their workforce growth rate in half. Hey, Microsoft, you're the backbone of all of that. What does this mean? Well, it just means that big tech's not buying our computers as much, and we'll go ahead and have to have a couple of rough quarters when these economic headwinds do subside. Still a very strong company. If you want some additional information throughout the week, feel free to find me. I'm out there. I'm on the internet. Till then, you, your family, have a really good rest of your Wednesday. I am out.